Hello, hello. I am Lisa Sretenovic, the Velocity Detective, and we are here today for brushing up your business for the upcoming year, trying to get everything for your business kind of wrapped up here in December. I am a volunteer with Texas Accountants and Lawyers for the Arts, TALA, and I wanted to just mention a couple of things. One is this is an interactive video presentation. So if you are logged into YouTube, please put some questions in the chat and we can try and answer them live today. Otherwise, it will be out there on YouTube after we're done. It does take maybe a couple days or something, but it'll be out there for you to look at it again. In addition to this one, there's a whole bunch of other ones. So be sure to look at Tala's YouTube channel and subscribe to that. In addition to that, we've got a couple of things coming up that are exciting for Tala. We've got the Small Claims Court for Creatives. It's a webinar that they're doing tomorrow at noon Central Time. You do have to register for it to get the Zoom link. Now it is online, but you do have to register in order to get the link. So go to Tala's website, TALARTS.org. That's talaarts.org, and register for the Small Claims for Creatives. That might be good if you're in a contract with somebody and they didn't pay you what they promised. Sometimes it's not worth actually going through a lawyer, but the small claims court can really be a great avenue for resolving some of those smaller items. In addition to that, if you're not a member of TALA, it's got some super great benefits to being an actual member. Yes, we provide some educational material for the general public, for creatives like you that are not members, but we have some that is in addition to this. And you get one-on-one pro bono legal and accounting advice. So if you need help setting up a limited liability company, if you need help getting your accounting in order, if you need help understanding what your taxes might look like, well, it's an absolutely phenomenal resource for you to use. Again, you can sign up for a membership at talaarts.org. But today, really, we're here to learn about how to get your information around your business caught up for end of the year so that you can start 2026 really, really going strong. We've got a couple of weeks before we get there, and there are a couple of things that I really want you to focus on getting ready for the next year. This is more about being compliant. So there's going to be a lot of things around reporting due to the IRS, due to the state, due to the county. And I'm going to try and talk about it in ways that the creative brain really understands and not so much in terms of IRS words. So it shouldn't be too boring, but I promise I'll try and wake you up occasionally, okay? So we've got some really great special tax and business things that have happened this year. First of all, I want you to get your vision centered, and then really get in the zone of thinking about your business. So first thing I want you to do is take your business hat and put it on. Okay, you saw mine was invisible. I want everybody out there, take your business hat and put it on. Mine is blue with a white feather. It matches my shirt today. So make sure your business hat is on as you're thinking about this. One of the things that does for you is put you in the right mindset. It gets you centered on your business and your vision focused there, and helps you physically get in the zone. So it's a really great way to get started in this. As we're thinking about being in this zone, I want you to reflect on the great things that have happened with your business in 2025. Did you start that LLC? Did you get a business bank account? Did you get a couple of new gigs that you haven't done before? So I want you to think about those, and I want you to uh, start an email to yourself. Start this email to yourself. And the very first thing that I want you to put in that email is the one thing that really stood out to you for 2025 that was awesome about your business. Now, if you haven't started a business, that's okay. You're thinking about starting a business, and that is your win. So it's really important to reflect back and celebrate those things that were fantastic about your business for the year of 2025. And that helps us get in the rhythm of being more in financial control and being a little bit more organized. Remember the hat that you have on? That's like step -1 to try and get into this rhythm. And as we start to think about getting your ducks in a row, it's going to help you get into that groove of being compliant with all of your regulatory reporting, not just your tax return, but also with the reporting that's due to the state, also the reporting that's due to the IRS, right? There's a lot of things that we've got on our plate today and to get ready for in early 2026. And by having this mindset of I've got to win. If you haven't even started a business, the fact that you are here today is a win, and I want you to put that the first item in your email to yourself. We're going to start off by talking about some of the tax deductions for businesses. We are assuming, first of all, that you are a sole proprietor. Even if you have a limited liability company, you're going to file Schedule C with your personal 1040 tax return. Well, at least I'm not sure what that means. It's just you're going to file your regular tax return to the IRS, and you're going to add one additional schedule to that. It's really easy to do, and it's only 2 pages, doesn't take all that. But if you don't know what to look for in these deductions, you might skip one. So I wanted to kind of put it together for you. These are the most common ones that I see for creatives. First of all, in order to look and feel legit, you're going to want to have a website and maybe a specialized email, and that might cost you something. And that cost is definitely a business deduction. If you are a member of TALA, my goodness, your TALA membership dues are a business deduction. If you only have one cell phone that you use for your personal and your business, then a percentage of that cell phone usage is obviously for your business. We use these devices not just to take a phone call that might end up with a gig, or to coordinate with your drummer, or to take a new client on. We also use the data portion of it to post on social media, to respond to social media, to utilize it in a way that brings us business for advertising. And it also is a way that we communicate. I mean, we've also got texts that we use to communicate with our clients or our vendors. So that cell phone usage, it can't be 100% if that's the only one that you own, but a portion of that cell phone should definitely be one of your tax deductions for your business. If you had meals, if you're on the road and you were traveling, your meal has a 50% deduction in 2025. Now, when you report it to the IRS, you report it as 100%. And if you're using something like TurboTax or one of the free versions that are online via the IRS to file your tax return, you'll bring that information at 100%, and that the program will automatically calculate that 50% deduction. So if you tell the program or your tax preparer only 50%, then you're only going to get 50% of that or 25%. So you want to make sure that you record it at 100% and let the automation do its calculation. Then I want you to think about supplies. As a creative, as an artist, as a musician, you've got a significant number of supplies that you go out to Jerry's or the Guitar Center to purchase. You're going to have guitar strings, you're going to have fabric, you're going to have brushes and paint and metal. All of those are supplies that you can deduct from your business income in order to lower your taxes on the income you get from your business. So I want you to make sure that you have these supplies. The other two items that are really common for us to take as a deduction is the home office expense and mileage. First one we're going to talk about is home office deduction. The simplified method for calculating that is that you have a dedicated space. Now, it does have to be dedicated within your home. Oftentimes, I see that a secondary bedroom is as a dedicated space, or maybe you've converted the garage for your studio. Cool, as long as it's not also used for something else. It can only be used for your business. So the example that the IRS uses is your dining room. So if your dining room has a dining table and 4 chairs, and you and your family sit there every morning and eat your Lucky Charms, you can't also then clear your plate and put your laptop there and say that's my dedicated space, because you're using it for two different functions. It has to be that and only your business in order to qualify for the business for the home office deduction. The easiest way to do that is take that square footage of that dedicated space and multiply it by $5. Now, this is on Schedule C, and it's an automatic calculation. You just plop in the number of square feet, and it gives you that $5. Now, that is $5 for the year, not per month. There's a longer version where you take as a percentage of the total square footage of your home, and you list out all of the expenses that your home has. Your rent or your mortgage interest, your insurance, your HOA dues, all of that. And you take as a percentage of the total square footage those. The downside to that is there's a lot that you have to calculate. And you have to keep all of those receipts. And you have to, it's just a lot of administrative work. And typically, it ends up being around the same. Right now, if you have a very expensive house, or maybe you just bought it and your interest rate is really high, then it might be better to do that longer version. But it would really, you have to make sure that you keep all of those receipts. Every single one of them, if you're going to go down that road. Similar thing with that mileage. For 2027, if you have a vehicle that you use for your personal side, and you use it for business also, the best way to make sure that you get the deduction for that is to keep a mileage log. Now, the IRS insists that you have this mileage log, and it has to be, I'm going to use an IRS word here, contemporaneous. Oof, big word. What does that mean? It means that it had to occur at the time that the event occurred, not if you ever get audited 3 years down the road, you go back and create this log. It has to be at the time that you actually had the mileage. So the easy way to do it is you just take the number of miles that you traveled for business and you multiply it by the rate that the IRS puts out. Now, it changes every year. For 2025, it's 70 cents. So you would multiply those number of miles by 70 cents, and that's the mileage deduction that you would get. Similar to that home office deduction, that's the simple version, that's $5 times your normal square footage. That's the easy way to do it. Now you can do it the hard way if you want, and that's where you take the entire amount of expenditures that you had for your vehicle, all of them. That's all of your gas, all of your insurance, all of your maintenance, all of the repairs. And you keep all of those receipts, and then you multiply that total by the number of miles divided by that you used for business divided by the total number of miles that you drove. So one thing that I want you to do, remember that email that we were talking about? Put a note to yourself on as the next line item to on January 1st, even before you get that first cup of coffee and you're still like maybe a little discombobulated from the New Year's Eve party that you were at, I want you to go out and take a picture with your device of your odometer. That is going to be your beginning mileage reading and consequently your ending balance. If you didn't drive your car anywhere, that's why even before you go to Starbucks, you must take this mileage reading on January 1st. Okay? So the long way to do it is you keep all of those receipts, all of them. You remember that crumpled up gas that you just shoved in your pocket because you were in a hurry, or or you said, no, I don't need a receipt. Yeah, that's not going to work. You have to have a receipt for everything. My recommendation for all documentation, for receipts, for your invoices, is that you have an electronic version of it. So that the IRS accepts PDF, JPEG, PNG. So as long as you have an electronic version of it, we're golden. But think about if you're going to do the long version of mileage or home office, that you have to have at least an electronic version of every single element. Otherwise, it doesn't work. So oftentimes for artists that are, especially if you're just starting out, it might just be easier to use the easier version, the more simplistic version, just because of the administrative effort that you have to put around keeping all of those other receipts. Speaking of the Schedule C, the version, this is Schedule C for 2025. And there's a couple of things that I want to point out. First of all, it's that mileage that we just discussed. There's a section below this that asks you for the beginning odometer reading, the ending odometer reading, which you're going to have because you're going to take your device out on January 1st, and then it wants that calculation of that mileage. If you're going to do this, you really must have that mileage log. There are a number of different ways to capture that mileage log. One is an old-fashioned, like really small little notebook, spiral bound, and a pencil or pen in your glove compartment. And on the day that you go somewhere, you just write down that you went to the gig in San Antonio and it was 47 miles. Simple enough. You need a date, a destination, the reason it was a business expenditure, and the total number of miles. Now, my husband, he's a music producer, and he does not like to do anything paperwork, right? He has that paperwork paralysis thing. So what he does is he knows whenever he's going to do a gig, he puts that on his calendar. Well, he notes it. He says it's a gig. That's clearly a business reason. He says it's a gig with this particular artist. And so he knows who it was with. He knows when it was with because it was on his calendar. And all he has to do is the destination. Well, as part of his calendaring, that's hard to say, process, he puts the destination in where they're going to be meeting. So now he knows that from the studio to that destination, he can go back and calculate the number of miles. And it's really easy for him to keep up with it that way. There are a couple of like apps that you can use. Mile IQ, MILEIQ, is a very common one. Most of them are paid. If you do have a QuickBooks Online subscription, oftentimes it comes with that subscription. So think about that when you're talking about your mileage. On the right-hand side, in the middle, we have supplies. We mentioned that on the previous slide, as those are the things that you're going to buy for your business that you use in order to produce your art. Now, one thing that the new One Big Beautiful Bill brought to the table was that instead of inventory for any business under $25 million in gross revenue, you can immediately expense anything. So if you had been keeping inventory before, you do not have to do that anymore. You can just say that they're supplies. What that's going to do is lower your taxable income. So that's an advantage if you wanted to do that. And it would go on that line item for supplies. One thing to note about receipts and invoices and such to support those supplies, and for that matter, any other expenditure, is the IRS kind of does have a limit that says if the expenditure was less than $75, you don't have to have a receipt for it. Now, best practice is still have a receipt, because if the IRS comes and they're looking, they're gonna, the more you look like a business, Ken, you have your business hat on, the more you look and act like a business, the more, if you ever get audited, there's not going to be a problem with the deductions. So best practice is to have a receipt for everything. But in the interest of that paperwork paralysis that I talked about earlier, if it's overwhelming for you, even to just take a snapshot of that receipt, then take into consideration having a policy that says anything under $75, I don't absolutely need a receipt for. The only exception to that is lodging. So you have to have a receipt for any lodging deduction that you're going to take, regardless of how the amount that it is. Okay, so keep that one in mind. Other expenses. Other expenses are going to be that web hosting that we talked about. It's going to be your information technology. So one thing I see a lot of our artists do is they have a subscription, maybe to Adobe or to QuickBooks or to Zoom as part of their business. Those subscriptions are legitimate subscriptions, but they are not in the category dues and subscriptions. Dues and subscriptions are for trade magazines and so forth, and things like your TALA dues and that sort of thing. Subscriptions is really about magazines and trade. What's another word for, like, newspapers and that sort of thing? It is not a subscription for your software. That would go in other expenses under a category that I like to call information technology. So all things information technology would go under other expenses. The one thing I want to point out before we skip on to the next section is your 1099s. Right there on the top third of this page, it asks you if you had a reason that you as a business need to give a 1099 to someone. And if you answer yes to that, then you certainly don't want to answer no to the next line item, which is, did you do it? Okay, so you want to make sure that if you owe a 1099 to a vendor that provided a service for you, that you check yes to both of those boxes. We're going to talk about 1099s right after we talk about W-9s, because if you have a vendor, doesn't matter who the vendor is, best practice is that you get a Form W-9 from any vendor. Well, Lisa, Guitar Center is a big person, a big entity, I don't think that I need a W-9 from them. If they do a service for you, you better get a W-9 from them because you don't know whether or not they are a corporation. You might have some indication that they are, but without Form W-9, you don't know for sure. And that's the only way you're going to know whether or not to give them a 1099. Well, we didn't pay them more than $600 this year. That's the cutoff, by the way. I don't care. I want you to get a W-9 from them because you don't know. We still have almost 4 weeks left by the end of the year. You don't know if you're going to need a service from them. And if you end up paying them more than $600 throughout the year, then you may need to give them a 1099. If you don't know whether or not they are a corporation, and if the IRS ever audits you for 1099s, you're going to have to prove that they are or are not the corporation. And this Form W-9 is what gives you that proof to the IRS. So best practice is to get one from everybody. Again, sometimes that's a little overwhelming and a little overkill. So second best practice is if they did a service for you, to get a Form W-9 from them. And you get it from them before you make that first payment to them. Because trying to track them down, like right now here in December, and they did the service for you back in March, oh my gosh, it's like how to find them again. All you had was their email, and you don't know anything else, right? So it's really best to get a Form W-9. Let me give you some examples of things that people do work for you, right? So if you own a band and you hire a drummer, that drummer, that's going to most likely be a 1099 opportunity, okay? If you are a painter and you hire someone to update your website, they did a service for you. If you are an actor and you hire a CPA to help you with your tax return and you pay them, that's a service that they did for you. If they do your bookkeeping, that is a service that they provided for you. So I want you to think about all of the people that did a service for you, and I want you to put down one person who did a service for you in that email that you're going to send yourself. Earthling Objects says, like, if you order printed stickers from another company, if the stickers were just in a package and you didn't have them print those stickers, then that is a material and it's not a service. If you have them print stickers for you, like with your logo and that sort of thing, yes, that is a service and that you need to get a W-9 for. If you're not sure, by golly, get that W-9 anyways. It's not going to hurt. Again, best practice is that you get one from any vendor. And by the IRS rules, they are legally obligated to comply with giving you a W-9. Well, Lisa, they won't give one to me. What do I do? Well, technically, you're still supposed to file a 1099. What's going to happen is you're not going to have a taxpayer identification number to match with that name of the vendor that you paid. And then the IRS could fine you $50. That's a possibility. The other possibility is if you continue to pay them, the IRS says that you must withhold, I believe it's 24% of what you pay them, and then report that to the IRS because they didn't give you the appropriate information. So it's really important that you as a business owner, remember you've got this business hat on, I am doing business. You don't want to jeopardize your business because some vendor isn't complying with the rules and regulations by not giving you a W-9. So what I want you to do is start right now trying to get those W-9s from those people. You remember that one person that you put? Do you have a W-9 from them? If not, then you want to put a little asterisk by that person's name to get one from them immediately. Now, you can get a free fillable version from the IRS, just irs.gov, or search for Form W-9. Make sure that you put IRS, because you don't want to use somebody else's form. It's free from the IRS, and you can just send that person a link. They can fill it out and hand it to you. Just like your receipts, the IRS accepts PDF versions of this, right? Signed electronically or however, okay? One thing I do want to point out is they're going to give you a name, and this is actually for filing your own W-9s if you do a service for someone else. So in 2024 and 2025, right now, if you are a sole proprietor and you don't have a limited liability company, you would put your legal name that you use to file with the IRS on line 1. And in the past, you've always had to put your social security number. Well, in 2024 and 2025, they changed the rules where you could use either an EIN or a social security number. That was great, especially if you had a limited liability company. Even if you're filing as a sole proprietor with the IRS, then you could use the EIN for the limited the LLC. Unfortunately, the draft version of 2026 W-9s is changing. Right now it is still in draft, so I suppose things could change here in the next 3 or 4 weeks. But right now they're changing it back to the old rules, where if you are filing a Schedule C, you must use your social security number on this Form W-9. Well, Lisa, I don't want the whole world to know what my social security number is. I'm sorry, the IRS has changed the rules such that it insists that if you are submitting a W-9 to someone for which you provided a service as a business, then you have to use your social security number beginning in 2026. So one of the things that you're going to run into, if you have somebody that gave you a Form W-9 and they gave their EIN, but they're filing as a sole proprietor, you're going to have to get a new W-9 from them because in 2026. So just be aware that that's going to be a thing, that the IRS won't do what they call a TIN match, TIN. That's your taxpayer identification number. It needs to match with that legal name on line 1. Now, if you're an S corporation, a C corporation, a nonprofit organization, yes, you can use your employer identification number, your EIN, but only for those. You must use your legal name that you're filing your tax return with the IRS on line 1. And if you're a sole proprietor, that's your personal name, and therefore it has to be your personal social security number. So then why do I care about having an EIN? Well, whether you have an LLC or a sole proprietor, even without an LLC, one of the reasons that you want to have an employer identification number is so that you can get a business type bank account. You cannot have a business type bank account with your social security number. It has to be with an EIN. And if you have an EIN, you look more like a business, again, with our business hats, right? You look and act more like a business. You're going to have a business type bank account, and that's going to help you separate your personal financial situation from your business financial situation. Highly recommend this. Again, if there's nothing else that you take away from this webinar, it's have a separate business type bank account. Does it work if you just have like a business account, a personal account that you dedicated to be business? You really need a separate business account. We learned during the pandemic that this was crucial in order to apply for a PPP loan. So there are reasons above and beyond just looking and acting like a business to have this separate account. Also, a lot of grants that you apply for, even as an artist, you're going to need to have that EIN. So I want you guys to understand that having an EIN is a fantastic thing, even if we can no longer use it in 2026, filling out that Form W-9. It's super easy to get one directly from the IRS. You just go online. It is free, pretty easy. You just sign up. Now, you do start with your social security number, and then you move on through the steps, and it gives you an EIN for your business at the end. Do you have to have a limited liability company to have an EIN? You do not. I want you to understand that being in business is really all about the intention. What do you intend to do? If you intend to make a profit, in other words, all of the sales that you've made from your business are more than all of the expenses, that's your supplies and your information technology and your TALA dues, all of that. If the number is bigger such that you have a profit on your Schedule C, then you have the intention of making a profit. Now, do you have to make a profit? The IRS says the first 5 years, when you're just starting out, we understand that you have to pay a lot to get the infrastructure. You need a new computer, you need to get advertising out, and that costs a lot of money to get the ball rolling. So we're going to give you about 5 years. But after the 5-year point, we want you to make a profit 3 out of every 5 years. They don't have to be consecutive, but we want you to make profit 3 out of every 5. And if you don't, you're going to start looking more and more like a hobby. Well, especially in the creative industries where we would do this thing that we're so passionate about, regardless of whether or not we had a business, because we just love playing the guitar or acting or painting, we would do it anyways. That's really where the IRS is going to say, well, did you intend to make a profit? Prove it to me that you intended to. One of the ways is by having that business hat on. You have an EIN, you have a separate business bank account, you have all of your accounting in order, you have copies of all of your receipts and everything that proves up that you are really intending to make this profit. Maybe you haven't yet, that's okay. It matters whether you intend to or not. And these are some of the ways that the IRS looks at whether you are looking and acting like a business, to allow you to have the business deductions. Because even as a hobby, you have to pay tax on the income that you get as a hobby. Well, Lisa, I'm not making any money. IRS says, I want a cut of anything that you bring in, but if you're just a hobby, you don't get to take any deductions. If you are a business, a legit business, again, you don't have to have an LLC or anything, then you get to take the deductions against that income. So if you really want your business to be a business, then one of the things you're going to want is that EIN. Let's go back to the idea of 1099s, okay? Some of the rules have changed in 2025 because of the One Big Beautiful Bill. We still have 1099 NECs and 1099 miscellaneouses sitting at that $600 threshold. All right, so what does that mean, Lisa? That means that if you paid someone for 1099 NEC, if you paid them for a service that they did for you, you had to have paid them more than $600, and you had to have paid them in cash, check, Zelle, personal Venmo, personal PayPal. All right. So not if you paid them with a credit card. If you paid them with a credit card, that's called that you're using a merchant service, and you see that $20,000 on the far right. That's the credit card company. If they have more than $20,000 of income through that merchant service, that's who's going to give them their 1099K. So remember that it's $600 for services. Now, what's the 1099 miscellaneous? Where that might come into play, and again, it's the $600 threshold, and it's still cash, check, ACH, Zelle, personal Venmo, such. Okay, but it's if you rent it from somebody. So let's think about rehearsal space. Let's think about rent for a studio. So if you rent space, then you would give them a 1099 miscellaneous if you paid them more than $600 for that rental space. The other thing to think about that doesn't come right away to your mind is storage space. That's still space. And so if you have a storage space that's specifically for your business, in order to take that deduction, you need to give them a 1099 if you've paid them more than $600 and you paid them in cash, check, Zelle, ACH, Venmo, anything that's direct bank to bank. The big thing that's changed this year is that 1099K at the far right-hand side. They were trying to make the threshold much lower. I believe it was $5,000 last year. They've bumped it back up to $20,000 this year. So most likely, unless you happen to be a place where you accept and then you're a merchant service provider that has an individual business that has more than $20,000 in transactions, then you probably won't end up needing to do anything with providing a 1099K for anyone, but be aware that you may get one. Now, I really want you to have more than $20,000 in sales from somebody. Maybe you use PayPal, right? That's a really good example. PayPal, Venmo, Etsy, those types of things. If you have more than $20,000 of sales through them, they will be giving you as a business a 1099K. That's a big change from last year, and this is supposed to be valid through 2028. All right, this is exciting, guys. The beneficial ownership information reporting, BOI, is the short terminology for it. At the beginning of 2025, it was a mandated thing that you absolutely have to do this. If you had a business that was a legal entity, so a limited liability company, a limited partnership, a corporation, right? Then you had to file this beneficial ownership information report. That is no longer the case. As of March 26th, they nixed the whole thing, and we are exempt from it. The only people that have to file are certain types of foreign entities. And so if you are a foreign entity, you may want to consult with a CPA around what that means for you. Somebody's sound dropped off. This is being recorded and will be on TALA's YouTube channel. So if you have not already, please subscribe to the TALA YouTube channel so that you can look at this one and a whole bunch of other things. That reminds me, not only are they doing the small claims court for creatives tomorrow, that webinar, but also in January, we're doing some I can't spit it out, some tax focused. So you remember those deductions that we talked about? We'll be diving a lot more into those. And then we're going to do some tax clinics where you can call in on Zoom and talk to a CPA. Hopefully, I'm going to be there. So you can talk to me or another CPA about your specific individual problem and get an answer for that. So please put on your calendar to, well, first of all, subscribe to that. Also sign up for the newsletter from TALA. That will give you a lot of information about these awesome things that we're going to be doing at the beginning of next year. So some other obligations that you're going to have. 1099s, yes, those are due January 31st. You also have a potential for a franchise tax return and an information return that you have to file. 05102 is the name of the form, 05102. And The deal with the franchise tax is that unless you've made $2.47 million, yes, million with an M, you don't have to file a franchise tax return. Yay! Okay. Although I would really like for you to make $2.47 million. So that's a great thing, but you still have to file an information return. And so it's really super easy to file if you have this web file account. It takes about 10 minutes to set up a web file account with the state of Texas. It's really easy, and then the filing takes about maybe 6 minutes. You're going to want to file that beginning January 1. I usually get all of mine filed by January 15th, just to make sure that their system is up and running properly. But I do it early January. It's not going to hurt anything. The due date is May 15th, but the sooner you file it, then the less stress it is on you, especially because you've got 1099s that you're going to have to file by January 31st. And then you've got your personal tax return with your Schedule C that you've got to file by April 15th. So my recommendation, go get that web file account. I would put that as your next item on your email that you're doing. If you don't have one already, get that web file account set up now so that when we get to next year, you filing that information report is super easy. Again, you create your account, you just go in and you file it. Even if you tried to file a franchise tax return, it's not going to let you if you have less than $4.7 million. Again, it's super easy. This is an example of the website for the franchise tax and the information report. For the information report itself, it's pretty simple. It's just going to ask you who owns this limited liability company, or that's something else. If you are just a sole proprietor and you do not have a limited liability company or a corporation, then you don't have anything to worry about. This is one of the administrative burdens that you do have if you have that protection bubble around you. We really like limited liability companies for that reason, but if you do not fill out the information report, then you risk losing your ability to do business in Texas with that limited liability company. If you continue to do business in Texas under that limited liability company, you've lost your protection for doing so. So if somebody sues you, then the state is going to come back and say, well, you didn't file your reports on time, and you don't have that limited liability protection. So just be aware that this is a really important thing to do if you have an LLC or a corporation. Business personal property tax is one of the things that a lot of artists don't even know about. One of the reasons they don't know about it is because the county and the state don't talk to each other yet. It's coming. I know that in Travis County, where I am at in Austin, they are really starting to coordinate with the state. But if you have a business, and it doesn't matter whether you're an LLC or just a sole proprietor, if you live in a county in the state of Texas, then you have the obligation to report your business personal property to the county that you live in, that your business is doing business in, okay? That means things like your computer, all right? That means if you have a machine that you use in your sculpting, that means if you have one of those little wheel things in pottery, that means if you have any type of physical thing that is not real estate. That's the difference between personal property and real property. Real property is buildings and land. Personal property is everything else, okay? The exception to that is intangible property, which is things like software. So software doesn't count, but anything that you can touch, see, smell, that's going to be personal property that you use to create profit in your business. Remember that the intention is to create profit. So if you use a computer, if you use an easel to paint on, that's considered personal property, and you have to report that to your county. Now, most counties have limitations where if you have less than X amount of tax due based on the property that you render to them, they're not going to charge you any tax. And even if you do have more than that threshold, it's a very small portion that they charge you. But the county wants their cut of your business too. And so you have to, now it doesn't matter whether you've made money or not this year. It just matters whether or not you are in business. Again, the definition of being in business is the intention to make a profit, regardless of whether you've made any money or not this year is irrelevant. You still have to file this. I've had some horror stories about the county found out that this organization had a whole bunch of sets for film production, and they never reported that to the county. The county assessed them thousands of dollars of tax because they didn't properly file. So I want you to make sure that you go to your county. The link that we have here is to Travis County, so you'll understand kind of a little bit more about what this is. But you can go to any of your counties and type in Williamson County Business Personal Property Tax, and it will take you to the right site. Some sites like Travis County, you can file online. Some of the smaller counties, they're still doing it via paper, and you have to mail it or fax it in. All right, I want you to look back over that email that we were talking about. You had a win, you had some things that you have to do. This is the start of your annual business owners meeting notes, okay? These are the agenda notes and the minutes of your meeting. Even if you don't have a limited liability company, it's still a really good idea to have these minutes. Again, the more you look and act like a business with your business hat on, the more professional you feel. In addition to that, the IRS is going to be more likely to see you as a business, even if you have losses. So it's demonstrating the separation of your business and your personal life. It's making sure that you have a clear record of what it is you want to do. The next item on your list is, what do I want to do in 2026? All right, so get that email back out, write down one thing you want to accomplish with your business in 2026. I want to get 3 new gigs. I want to make $10,000 more. I want to sign up for TALA. I want you to write down one thing for 2026 that you want to do. Also, if you have even a dispute with other people in your business, sure, but maybe it's just you. If it is just you, when you write these things down, then you get to a point where, well, should I spend the money on a new equipment because it's on sale, or I should keep it in savings for my emergency fund? Well, if you said at the beginning of 2026 that you wanted to spend it on equipment, then you already know what your answer is, and your emotional stress level is just eliminated because you already know what you said to yourself. You've made a commitment to yourself as a business owner. So that's one of the really great things about having these minutes is you can go back and reflect on, okay, I said I wanted to do this. This is what I'm doing. This is how close I'm coming to doing it. I'm killing it, or I need to put a little bit more effort in. The other thing is, if you do have a separate legal entity, like a limited liability company, an LLC, or a corporation, having written minutes, they do have to be in writing, having written minutes helps with some advocating that it still looks like you're legitimate business, you're looking and acting like one. And if there are any other disputes, it really brings to the table some solid evidence that you're doing what you said you were going to do, and you are looking and acting like a business. So having these minutes, and again, this email that you're about to send to yourself, this is the start of that. I want you to, on your email to yourself, set a date between now and December 31st. Pull up your calendar right now and look at it. Okay, everybody, get your device, pull up that calendar, look and see what's a good day for you to really put your business hat on and think about what it is that you're thinking about for your business for 2026. So, and I want you to have an annual meeting with yourself every single year. All right. And I want you to do it in November or December before January gets here, because when January gets here, there's too many things that have to go on. That's going to get you into this groove of really having that business mindset. And that's going to have a lot less stress on you as a business person, right? You as an artist, you love your craft and you get so much energy and such out of it. But when you have to do all of this paperwork, if you're in the groove and you understand that looking and acting like a business is what's going to make you more viable, then having this groove is essential. And again, one of the ways to do that is to make sure that you plan in advance. So that's why we want to have this email to yourself. Those deadlines, I'm going to go over them one more time right before we end here. January 31st, we have 1099s that you are going to give to your service providers or those people that you're renting from. That's when those are due, is January 31st. Also, if you have any payment due for business personal property tax, that is also due by January 31st. Your 1040 tax return with your Schedule C is due April 15th. Or you can file for an extension, but you have to do it before April 15th. April 15th is also the day that your business personal property tax rendition is due. That's you telling your county what kind of business personal property that you have. You have to just make a list of it and send it into your county. That's due April 15th. May 15th is that Texas franchise tax or your information return if you don't have that, if you are under that $2.47 million threshold. That's that information return. That form again is 05102-102. And that's only if you are a limited liability company or a corporation do you have to file that information return. But it's due May 15th. Again, my preference is to get it done in January. Get as much done in January so that you can spend the rest of the year focused on your art and not focused on compliance. October 15th is the extension deadline. If instead of filing your return, your 1040 tax return in April, you extended it, you have until October 15th to get it filed. Now remember that the IRS expects you to make a payment in April if you owe anything, but you can postpone filing the return until October if you file an extension by April 15th. And the state, if you need to extend your Texas franchise tax return or the information return, you can extend that. You need to go and file an extension. The IRS extension and the state extension are two different things. But if you file an extension, you have until November 15th to file those returns. All right, y'all. Really, I want you to refocus a little bit right now before the end of the year. I want you to collect those W-9s from your subcontractors, from those people that provided a service for you. I want you to start feeling like you've got control over this paperwork that you've got going on by reviewing all of those tax deductions. Maybe make sure that you go through your personal bank account and see if by chance you accidentally made a payment out of your personal account for a business expense. You want to make sure you capture that. So start being in control of that and getting ahead. Don't wait until April 15th. You want to really feel like you've got that control over that paperwork. And then I want you to set a plan. So now we've got this email outlined for ourselves. I want you to go ahead and send it to yourself and get in that groove of gathering your receipts throughout the year, not waiting until the end. And make sure you have that business hat on. Make your business plan for 2026 and do it now instead of waiting for halfway through the year and just kind of flying by the seat of your pants. It's been a wonderful, fun time with you guys today. Thanks for hanging out with me. I know this is a lot. Remember that you can sign up for TALA. It's got really, really awesome resources. There's going to be a couple of webinars coming up in January around all of the detail of all of these tax things. And really, I want you to feel empowered as a business person, not just an artist, but as a business person. Put that business hat on. And I will see you the next webinar.